into the folder, right? There are a few of us who have the ability to pin this stuff in here, right? If it doesn't get pinned, it's going to disappear. So the administrators, if y'all see something in this education folder that needs to get pinned, you need to pin it up. We have an indices folder. All the indices chat, along with the gold chat or your charts or whatever, drop that in the indices folder, okay? And, you know, for those of you who are dropping that in there, I think it'll disappear in 2 or 3 days. So this folder should be kind of self-maintained. This is the currency pair folder. There are currency pairs, trade ideas, drop them in the currency pair folder, okay? Try to keep the general chat to general chat, or you can go into the general chat and say, hey man, I'm dropping this in the folder or whatever. And you can get commentary, or people can look at your trade idea and give you feedback from either the currency pair folder or the indices folder, okay? This Zoom link is the link to the class. I don't know that, like, can you guys use this link when I'm not on? Like when y'all go on, can y'all see each other? If I'm not. So anybody is free to use this link. Like y'all don't have
to. If you're not here, unless I'm wrong, we can't use your Zoom. Your Zoom. We can,
yeah, because I tried to log on one day to see if he was randomly on here and it let me on.
Oh, okay, cool beans.
Yeah.
Yeah, so feel free to use this link. I mean, don't be surprised if you log on and I'm on, but feel free to use this Zoom link if you guys want to Zoom about something. I don't have to be included in y'all's Zoom. And when I first joined Ruby's group, to me, that was one of the benefits of that group, because maybe Dez and Demise or Dez and Steph are talking about indices. I don't trade indices regularly, so I don't need to be included in that conversation. But if you guys need to jump on Zoom and mix it up or have a conversation or share your charts or whatever, I mean, y'all are free to do that. And the link is always here and it's always the same. The previously recorded videos, Alicia put that up. It'll be on my YouTube page. If we ever have a one-on-one, those meetings won't be accessible to everybody else. But every time we do this weekly meeting, that meeting will be accessible to everybody, okay? What's going on? News. If you see news articles or current events that need to be dropped, drop them in this news folder. That way everybody's, I guess, on task, you know. Profits, okay? Demo or otherwise, you know, show your success, show your progress. And that way, we can know whether you're on the right track or not. You know, if you don't know something or if you're having problems with something, ask questions. Anybody is able to help, you know, somebody else. We don't have rules that you can't use outside sources or any of that stuff, okay? Use what you have to. I know I dog Alicia a lot about her trend lines, but if you're a trend line user and that makes sense to you, use those nasty trend lines. I mean, I'm just joking when I poke at people about, you know, about how bad their charts look. But whatever works for you, you know, as a trader, you have to kind of employ that to keep your trades going. Just for the new people who may not know, I'm a swing trader. You know, I'm going to take, and the trade ideas that I post are always going to be swing trade ideas, okay? I take my trade ideas off the weekly charts, off the daily charts, or off the 8-hour charts, all right? Whenever I teach you something or teach you how to trade, I'm going to teach you what I know. And that's what I know. That's what works for me. I'm very successful. I mean, y'all can see the results I get out of my trades through that profits link. Now, with that being said, you can't ask me about a day trade because I don't. I'll tell you what I think, but I'm not going to be telling you from experience. You understand what I'm saying? So you might want to ask somebody else who's successful when they day trade. And I think probably Stephanie day trades or short-term trades. I think maybe Alicia does some as well, but the order blocks do work, but you have to be cognizant of the higher time frame retracements when you start picking order blocks on the lower time frames. Okay. Whenever I pick out a trade set up on the 8 hour or the daily or the weekly, I understand that this is good for at least, 3 or 4 candles, 2 or 3 candles, right? If it's on the 8 hour and you get 3 candles out of it, 3 times 8, you got 24 and you're good. You got 24 hours for this trade to marinate, right? Or you got, 3 days, or you got 3 weeks. So just understand the time frames and how they correlate to your trade. Okay. Don't expect to see profit if you take a day trade. Don't expect to see profit in 3 hours. Don't hit me up talking about, hey man, this trade is red. I mean, you can, but I'm just going to tell you, be patient, and don't be that person. If you enter a day trade idea or a weekly trade idea, when you see you $300 in profit, you move your stop loss up and the trade comes back and hits you and you gain $300. And at the end of the week, when I show my profit, you're like, well, God dang. And I'm like, yeah, you would have been here, but you wanted that $300. So you gave away this 10 grand, right? Because if you allow your trades to run, you got to be able to hold your trades. You hold your winners and you cut your losers short. That's how you make money. That's the name of the game. And if you can't do that, you're going to struggle being consistent. Okay. All right. I dropped some information in the chat yesterday in reference to trading plans. Okay. It's very important that everybody establishes a trading plan. Drop a 1 in the chat if you have an accelerated account from My Forex Funds. Okay. If you're trading an accelerated account from My Forex Funds, there is a way that I know that you can be successful at doing that. Okay. So if you end up trading an accelerated account, hit me up, because you don't need to take a lot of trades. You need to take 1 or 2 trades in that week. That's it. Take it at the beginning of the week and let it roll. Let it go. It's either going to hit stop loss or take profit, but you'll make your 10%, that week or the next week. And you're not risking your account by over trading. Okay. So if you're going to do the accelerated account, we can get together, we can pick a day, preferably on the weekend, that we can frame whatever trades that we're going to take, and it'll just be 2, and you'll take those trades and you'll live with the result, but you won't be blowing your account. Okay. And it's the same with any funded account that you trade. You got a 5% drawdown per day. If you understand that and you're taking trades on the daily chart, you can take 2 trades every day or every other day. All right. So when you take the 2 trades on Sunday or Monday, you have to wait 2 days so those trades can be in profit. Then you can take 2 more trades, because you won't go into drawdown on those first 2 trades because they'll be in profit. You can move your stop loss to your entry, and then you can use your risk on those other 2 trades. You have 4 trades in there, and they'll just rack up money. All right. If you ever look at people's profits, like my profits, I know they're always going to be staggered. It's always going to be 2 trades, 3 at the most on one day. That's 3% of my accounting risk. I'm not in risk of drawing down 5%. If I lose every trade, I lost 3%. It was a bad day. That's not happened to me so far. But if you do it like that, you will never blow your account. And you'll probably find that you'll be wildly successful. So come up with those rules and put them in your trading plan. If you're not successful and you employ the strategy that I gave the group, as far as using the order blocks to enter your trade and waiting for the next candle. And if the next candle picks you up, great, you're in the trade. If it doesn't, great, you're not. You're never losing. You're either going to win the trade, it taps you in, or it doesn't. And maybe your frustration builds because you'll have 3 setups and none of them will pick you up. You might be frustrated, but you won't be down, right? You won't lose money. You'll just be frustrated. So be patient, all right? I can't preach that enough. And the most frustrating thing about waiting on day trades is you don't have very many that show up, right? Like you might get 3 day trades. And if you miss the entry on all 3 of them, now you don't have a trade. Understand that that's winning, because you can go and hop in any trade and lose it. I think all of us know that. We've all hopped in bad trades because we had FOMO, fear of missing out. So just avoid that, and you can avoid taking losses in your account. Big up to Stephanie for building her account from $500. She didn't take the way that I suggested people take, which is buying a prop fund account. She took $500 and she grew it, into an account over 10 grand, 5 months. Big ups to Stephanie. A lot of us can't do that because a lot of us can't take $20 wins when we first start that $500 account. We want $500 wins, which is unrealistic. Always trade based on percentage and not the dollar, okay? Chase the percentage, don't chase the dollar. Chase the pip count, don't chase the dollar, okay? Always take the first equal high or the first equal low and take partials. That partial that you take should cover whatever you risk. If your risk was $100, when you partial out at that first spot, you should partial out $100. That way, the rest of that trade is risk-free, okay? When you partial out that $100, your stop loss goes to entry. So if the trade comes back to your stop loss and hits your stop loss, you didn't lose. Okay, that's all the admin notes that I have. I think a few of you guys have charts that you want to share. What we'll do is we'll go through and we need to break down at least 3 pairs, and I'll let you guys do the break. Does everybody know how to frame a trade? Drop a 2 in the chat if you don't know how to frame a trade.
What do you mean by frame a trade?
So basically, we're going to identify order blocks on the monthly, on the weekly, and on the daily. Once you identify your order blocks, your trade is framed. You know exactly the range that your trade is going to move.
Okay, thanks.
Do you know how to do that?
I just learned about order blocks 2 days ago, so I'm still learning.
Okay, so you'll need to see it. Felicia, you know how to do it, correct?
You talking about?
Yes.
do you want to do it?
Do I want to? No, but I can.
Oh my God. Okay. I need somebody to
Okay, I'll do it, Todd.
okay, I'm gonna give you control because I mean that's the only way I know how to do it from here. Believe. It's all yours.
Okay. Can you see my screen?
No.
No.
Did you click share?
I thought I did. Hold on.
There we go. Something's happening.
Okay. Is there any particular pair you want me to?
No, I don't care which one. You'll frame it. Once you frame it, we'll see whether it's a tradable pair or not, right?
Okay. I'll just randomly pick something. All right. So these would be my monthly frames. This would be the top and the bottom.
Can I ask you a question though?
Yes, please.
Not that I totally disagree, but
Okay.
how come you don't use the for the top order block? How come you don't use the freshly?
This one right here.
Yeah.
No reason in particular. I just
Because well, I mean, the right answer may be because the month is not technically over, right? We got one trading day, and technically, this pair could go up, and that could not be an order block.
Yes.
So we'll just go with the with that answer, okay? Because technically the month is not over, and really we should wait for candles to close. So I don't want to give anybody the wrong impression. So I asked that question because somebody might have that question.
Okay. And as far as the bottom,
I'm fine with that.
okay.
Hey, I do have a question. I do have a question on the bottom. Why not why not that one? Yeah.
That's a great question. Why not that one, Felicia?
If I mark it out, it's already been.
It hasn't.
I guess.
It hasn't been violated. Because
No?
technically the wick on that red candle, you see the wick on the red candle of that order block?
This wick here?
Yes, at the bottom of that candle.
Yeah.
Technically, that's part of the order block.
Okay.
Okay, now you can delete the bottom one. I was going to call you out after, but or not call you out, but I was going to correct you after. I just want to follow your thought process.
Okay. And I guess because I'm just so used to the bodies and not necessarily the wicks.
Well, listen. It's fine if you that's your thought process, right? But this is why I always encourage people to drop their charts in the chat, right? If you had dropped that chart in the chat, I would have definitely said, hey man, the order block is actually a little bit further up, and the dialogue would have happened. But just like like Terrence saw it, right? Other people, it makes everybody aware of that situation. But if you had sidebarred me on it, I would have still answered your question, but everybody wouldn't be aware, you know, and that's the benefit of doing this in front of everybody.
Okay.
Hey, can she explain what she was thinking as to why you were looking at the last couple of candles and you were trying to decide why that might not work? I'm just trying to follow.
You mean right there?
Yeah, well, no, the last two candles on the monthly, she was looking at those and saying that this was not
the next order block down, the one you had highlighted, right?
No. The one that's highlighted now, she was looking at the last two candles, and because of where they are, she was thinking this might not be an order.
I can answer that if you can't. I mean, she thought it was violated basically because the wick of that green candle went below the body. Put your
Gotcha. Okay, I see what you're saying.
So once price goes past the order block, that invalidates that order block.
Gotcha. See, I learned something.
Okay.
Oh, back to the wicks. Okay, so I would say that this would be the next order block as far as
the way I do it, I would agree. I would agree. Now, I'm gonna use this time to tell you that a lot of videos that you watch, they don't count doji candles as order blocks. Okay. But I do. I use those candles. So yeah, highlight it.
And you would use it from wick to wick or just the body?
I'm still, so it is wick to wick. I'll say that, yes. But when I protect the order block, I only use the body, right? So if I was taking a trade from there, make it larger, please. So my stop loss on that candle would have been very small. But for those who know me, I don't trade with a stop loss. I trade with a hedge trade. So I don't get wicked out of trades. That wick right there would have picked up my buy stop. And as the trade came down, I could have just cut off my buy stop.
Which wick?
That wick right there. Because that's the wick that taps you into the trade, right?
Right.
The way I teach it, that wick taps you into the trade. So for you guys that use a stop loss, that wick would have also stopped you out of that trade, maybe, with a 2-pip stop loss. But for me, I would have had a buy stop above that trade as the stop loss. So when that wick happened, it would have triggered my buy stop. And all I would have had to do was cut my buy stop off as that trade came back down, and I'm going to win. That's called hedging.
Meaning price would have came here or came down here and went up and then came back down?
So.
Oh, no, you said buy stop, sorry.
Yeah, so you see how that wick, like if you had a stop loss at the top of that box that you just created, right? So that's what your entry would be the bottom of that box and your stop loss would be the top of that box, right? If you were setting up a sell trade, because you saw that order block right there, there you go. There you go. So, and your stop loss would have been 5 pips. I don't have a stop loss right there. Where your stop loss is, I have a buy stop. Does that make sense?
Yeah.
So you would have gotten stopped out of the trade. Mine would have just picked up. I would have a sell position in the negative, and I would have a buy position that's positive as it goes up. But then when it comes back down, my buy position goes negative as my sell position turns back blue. So I will cut off my buy position. I'll lose money on that buy position. But as the price drops, I'll make money on the actual move. Okay?
Hey, Todd.
Yes.
Hey, like you said, the videos would not use that for a order block.
Right.
So why are you using that for an order block?
Because I understand order blocks. The order block is actually that entire candle. Right? What you as a trader choose to protect, the reason why traders like using order blocks is because they want to know the exact range. So Felicia, you see that entire candle that you have highlighted right now. Set your entry up. Set your entry up. The green box, not the yellow box, the green box. I want you to set your entry up using that box. You can just delete that one and get another one if you want. There you go. So if you were this is what your trade setup should be, right?
I would have used the green candle at the top of that monthly order block.
Okay, so set your trade entry up, Felicia.
I'm so confused.
So you see the order block at the top up in the yellow? That order block?
Yeah.
Set your trade entry up for that order block. Terrence would have missed this trade. You wouldn't be in this trade. So I don't even worry about that. I ain't worried about you. You missed it. All right. So I use the order block down here that got me in the trade, right? And this is my thought process. All of us, you know, when they say you have to develop a trading style and you have to, I used to wonder what that meant. And this is all that it means, is making choices like this, right? How big is your risk tolerance? How much profit do you want to make? How do you want to frame your setups? So there's 1,000 different ways to enter a trade, right? So delete that last position, Felicia. And let's go back to the position that I wanted to enter in. I told you use that whole setup, not the little one, use the whole one, the whole doji candle. Because I want to go back to a point that Terrence made. If a trader uses the entire order block, right? Savannah on Smart Money Academy only uses half, right? Now, by her using half, she misses out on a lot of trades. But the ones that she catches, she has a small stop loss. So she makes a lot of money in that one trade. And that's her style, right? That's cool. That works for her. What works for me is to get in the trade, right? I can use it as tight of a stop loss as I want to, and it's always going to pick me up, and I can just cut my hedge position off, which is why I set up positions with Aaron all the time. Aaron is my son. I set up positions with Aaron all the time. Aaron will get stopped out, or he won't get in the trade, and I'll be making money on that same trade. It's the style that I use that allows me to get into those trades, right? That's all it is. Once you develop your style, you know, you'll find out what makes you the money. And what I've discovered is, if I could just get myself into this trade, I'm a day trader. My trade is going to run 3 or 4 days. So if I get in this trade with a 0.25 stop loss, $2.50 a pip, the first time it pulls back and I can add a real position and I'll make a lot of money on that trade, right? Because I was, you know, I'm following it because it's on my phone. I'm in the trade already. All you need is one trade to make you $5,000 a week, because you can enter one trade and just keep adding positions in that trade. You can add 2 positions every day. If you have been in EU or GU this week, Essence, GU ran 200 pips this week. It did 200 pips. It actually pulled back Friday, but if you had got out Friday morning, whenever I posted my results Friday morning, if you had got out of GU Friday morning, you would have got out with 200 pips profit. Now, you could have had 4 or 5 positions in there. One trade, and it would have paid you over $5 grand this week, $6 grand this week. Essence had one position in GU. If her position was a 0.50, she made $1,000 off one position from Sunday night to Friday morning. $1,000, one position. If Essence had added 2 positions on Tuesday, or let's start with Tuesday, 2 positions on Wednesday, 2 positions on Thursday, her $1,000 went to $6,000 off one trade. And that's the power of understanding order blocks. You can get in 2 positions every day, as long as that trade is going in your direction. So the reason why it's important to frame the entire order block is the candle that Felicia's mouse is on right now. It got you in the trade. You're in the game now. The next time this candle pulls back on the 4-hour time frame, I would wait a whole day. I wouldn't add any positions the first day. The next day, though, on the 4-hour pullback, you add 2 positions. You let it run the whole day. The third day, it pulls back on the 4-hour time frame, add 2 positions. You're golden. You're going to make all kinds of money. One trade, one setup. Enter on the order block. So that's why I do it like that. I want to protect the body of that candle, because the likelihood of of that wick going to that candle is probably about a 65% chance, right? If I get that trade, that's a trade that I want, because if I get that trade, I'm going to make oodles of money. If I don't get that trade, who cares? Wait for the next setup. I'm not hurt. But the trades that I do get, I make sure I get them because I don't use a stop loss. I use a buy stop or a sell stop if it's for a buy trade. So I know I'm going to get in that trade. Y'all understand that? Drop a 2 in the chat if you need more of an explanation. And maybe, you know, we can do a one-on-one and I will show you, you know, exactly what I mean when we talk about those setups.
But I have a question. I may have missed it, but I don't know on Felicia's chart, the small block. What is that for? That one right there.
She's protecting the body of the order block, the doji candle. It's the body of an order block, basically.
So what does that mean? As far as her entry is concerned, I don't understand the purpose of that block.
So if that's how I personally would have framed this trade. So I would have gotten this trade. What is your stop loss using that position? So I have a $50,000 account. I'm risking $500. That's 1% of my account on this trade. I got to protect, let's just call it 5 pips. So that means I can make $100 a pip. What's the lot size that I would use? 10. Anybody? What lot size would I use? I got a $50,000 account.
Okay.
$500 at risk for this trade, a 5 pip stop loss. That's right, at 10.0. So let me give you the beauty of a 10.0. How far did that candle go? How far did it go down, Felicia?
Wait, which candle? Sorry.
That one that tapped me in, Felicia. That's
this one right here.
No, the one that wicked, that wick candle. That's a whole week right there. Yeah. How far did it go down? Where did it end? No, don't go down to the wick of that candle. Go down to the body, because that's when I would have got out. So $100 a pip time, how many pips is that? 41.29. How much money did I make, Selena? 41.29 times 100.
That's the risk to reward, though.
I was gonna say, wouldn't the
So
pips
okay,
be
okay.
173?
The pip count is 175.4.
Yes, 173.
17,000.
How much money?
17,300.
Well, damn.
Yeah, I know. One trade, one position. One position. It's simple. It's simple math, guys. Like, that's why you do it like that. That's why you learn. I've had so many people tell me, hey man, why do you hedge? Or I get confused when you hedge. No, it's not hard. You can write it down when I tell you it's not hard. It's not. One position is going to be red, one is going to be blue. We expect the trade to drop. So once it starts dropping, you start cutting off that buy position. 175 pips later, $17,000 to the positive, you appreciate life. So that's why you would use that little box. That's why I use that little box. So to me, it's worth me making 17 grand to do a little extra work cutting off that hedge. Whereas you would have used a stop loss, you'd have lost the trade. And I would have been counting 17,000. You'd have been looking at me like I was crazy. And this is why I learned to hedge. This is why the professional traders learn to hedge. If you have aspirations of making real money trading, you'll learn to hedge. And this is why I use a doji candle. Savannah doesn't use a doji candle. But that's not her style. She makes plenty of money, I guess. For me, all of it works. Like, that's an order block. What you'll learn when you start studying order blocks is that the banks that did business at that order block did it in that body of that candle. So maybe it wasn't a lot of orders at this particular order block, right? Maybe it wasn't $10 trillion of business done, so that candle, the body of that candle is smaller. Maybe it was just 2 million or $4 million. I don't care. It's still the footprint of a bank. That's the important thing. When y'all do y'all research on order blocks, all it's telling you is this is the footprint of an institution getting into the market. So that triggers you into knowing, hey, I can enter right here where some institution just got in. You don't know who it is. You don't know if it's the Bank of Guam. You don't know if it's the Bank of America. You don't know if it's whatever hedge fund, but some institution got in right there. You can follow them. That's all. And that's the power of trading with order blocks. We know the direction the market is going. All we have to do is decide whether we're going to enter right there or not. And that's, I'm sorry, go ahead.
So when you hedge, like my mistake when I'm hedging, so when you set up this block that Felicia has set up, so you go ahead and put both positions in at the same time. So if you get picked up, you're already in there, or are you watching it and then put it in? Because I'll hedge.
No, you have to have them set up, because this wick could be like that, right? You have them set up because you expect the trade to go there. You're expecting that. And here's the thing. I could have woke up 4 hours later and the hedge position could be way down somewhere. It could be 40 pips down and I can just start cutting it off at that point. You don't want to cut the entire position off at once, guys. When you cut your hedge off, cut it off little by little. It's still going to go your way. You just don't want to cut it off all at once, because trades move back and forth. So you cut it off little by little. You know, maybe over a 20 pip range, you cut the whole thing off, you know.
When you say cut it off, do you mean like take partials? I mean, I don't understand that.
So you're taking partial losses, yes.
Yeah.
You will go to the negative position. Like I would go to that buy stop as it's going down, and I will close position and I'll go adjust the number. I won't close 10.0. I might close 0.70 and it goes down 5 pips. I might close 2.7 and then it goes down 5 pips. I might close 3.5, right? So as it goes down, that hedge is getting smaller and smaller, right? And maybe over that 20 pip radius, I just cut the rest of it off and I'm good.
I didn't know you can take partials on losses, but I'm wondering, like,
You can
why
take
not?
partials. All right, go ahead, Effie, I'm sorry.
Together?
Why not what?
Why not close it all together?
Okay, that's a great question. Elfie says, why not close that all together? All right.
That's how you get wrecked.
So if you close, if I have a 10, if my position is 10 lots, I'm trading a funded account. I can only go and draw down 5%, right? So 5% of a $50,000 account is $500. So let's just say I see it and I cut it all out at once. So that means if it goes backwards 6 pips, I'm done. Y'all understand that?
I think I kind of get it. But I wanted to ask another question though about your order blocks, because you said you even take the dojis, but even with the dojis, you only consider the body. So in each order block, you're a stylist just to consider the body rather than the wicks.
No,
Understand?
that's not what I said. So I only put my stop loss, and I don't use a stop loss. I only put my hedge position at the top of the body on a sell trade. I only protect the bodies. I'm only interested in getting in, protecting the bodies. I use the bodies as my stop loss or my hedge position, right? I understand though that the whole wick is part of that order block. Okay. I don't want to confuse y'all on it.
But
like
when you say protect the body, what do you mean? Like, where is your entry? I
My-
understand the
Okay.
entry for the stop, for the opposite stop, like the hedge. I understand that is at the end or at that body part. Your entry would also be
at the bottom of the body.
right. So, okay. Which means it's basically just the middle of that entire order block that you're actually working with. Is that what you mean by protect? Or
Yeah.
I don't-
Yeah, yes. My entry will be at the bottom of the body, and my stop loss or hedge trade will be at the top of the body. No matter how big or small that body is,
Mhm.
that's where that's what I say protect. That's where I'm gonna enter and use my stop loss. So whether that's 15 pips, 30 pips, 100 pips, that's what I'm protecting when I enter this trade. Now the wick can be a lot longer than that. And that wick is still part of the order block. And that's why sometimes the wick doesn't make it to the body and you don't get into the trade.
Mhm.
So show me a different order block that didn't pick up on this page, Felicia. Okay, you see that green? Just go over. Yeah, that order block. That one. You see how the wick of this candle never went up there? It just left an imbalance.
You mean the wick of the second of the red candle after the first or after that order block? Yeah.
Yeah, the red candle came back and filled half of that imbalance. Show me the imbalance on that move, the imbalance between there and that green wick. Come down to the green wick though, Felicia. That's the imbalance. The red candle tapped into that imbalance. You see that?
Yeah.
So a lot of times when you see an order block, you'll see that the third candle will come back and tap in, but it'll only tap in and match the wick of that first candle. That's still hitting the order block, but it's just hitting the wick of that order block. And you have to understand that as a trader, but it's not necessary for you to understand it right now as a beginner, right? Like you'll start picking this stuff up as you trade order blocks. I don't want to confuse anybody, by focusing on the wicks. I just want to focus on the body because if you take trades and just protect the body, you're still going to be wildly successful. It's just that over time, you'll realize how you can become more successful by not using the stop loss. You realize you can be more successful by using a hedge trade at whatever end, whether it's the top. Hey, Tanisha, can you mute your phone, please? You can use you can be more successful by using a buy stop at the top of a sell position and a sell stop at the bottom of a buy position. Okay, but while you're beginning, don't worry about the advance. Just do it exactly like I talked to you about on the video, right? And as you become a better trader, then you can make adjustments, right? Just enter the trade at the body and put your stop loss at the top of that body and let it go. As you develop as a trader, you'll be like, okay, I see a different way I can do it, right? And then you will adjust it to you. Does that make sense?
Yeah.
Is anybody confused? If you're confused, drop a 2 in the chat. Okay, Tanisha's confused. Can you circle where the sell stop taps in on that order block?
It's this term right here.
Okay.
Explain what protect the body means. You're just basically trying to find.
Okay. Can you give me the screen back? Fifi? Can you give me host? You got to give me host back, Felicia.
I'm working on it, Todd.
Oh,
Go to participants and
highlight my name.
highlight your name, click more, and make host. Okay. Are you sure you want to change? Yes.
Right there. Okay. Let me show you real fast. All right, I'm just going to use this. I'll find the order block in here. Okay. Everybody see this order block right here?
Yes.
I would highlight this order block.
Yes.
This is a bullish order block. I expect price to go up. I can take this price to the first equal high. I would throw my long position in. When you trade smart money, this is where your first take profit would be. To this first equal high, right? Even if you're trying to take this back up to this order block, your first take profit, which would protect, it would cover your risk. This would be your first take profit. So this would be my entry. Let me make that darker. And this red candle, or this red line that I'm gonna put here, this would be your stop loss. I don't use a stop loss. This right here for me would be a sell stop position, right? So if price comes down and hits this red line, it opens a sell stop, and I'm gonna start selling it for the same lot size that I'm trying to buy it for. Y'all understand that? This is a 62 pip stop loss. So it can go 62.7, but if it goes 62.8, I'm picking up a sell position. And that's what's called hedging. Now, I understand that this entire area is the actual order block. But whenever I say I'm only protecting, when I say I'm protecting the body, I'm framing my trade to the body of this red candle. That's all I'm interested in. I only want to cover the body of this red candle. If the price comes in any on this wick up here, I'm not going to get in the trade. But if it comes to the body, I'm going to get in the trade. If it comes down here, I'm going to stay in the trade because I have a sell stop that keeps me in the trade. You would have been stopped out. I'm not stopped out. So once the trade takes off and starts going up, then I start cutting off. I start taking partial losses on this sell position. I'm taking partial losses as it goes up. Then once the trade starts going in my direction, I'm in profit. Does everybody understand that? So I can hit play. It picked me up. See, it pushed down, but it didn't activate my sell stop. Now I'm in profit. Now it hit TP1. It went up. I moved my stop loss to entry. And now it took me out, right? At this point, I could have had another buy position to go up if I wanted to. Or maybe I had, if I had a buy position, my sell stop would be activated, right? It depends on what my analysis of this market was. Whereas you would have, we all would have won this particular trade, right? Because we would have partialed out right here. Then price came back and stopped us out. But we would have not lost money because we would have partialed our trade out. So you can get out the sell when you're in profit about 20 pips. Okay. So yes, it doesn't matter how many pips you're in profit, Tanisha. You could not be in profit, but you can see the rejection. Maybe this sell position picked you up. I know maybe it came down here and you tapped in your sell stop, but it started coming back this way. You can start parceling out while it's in the zone. You can have it all the way out by the time it reaches your original your original buy limit right here. But what I'm telling you is to take those partials over a 20 pip range. Don't just cut the whole position out. Just over a 20 pip range, you're getting out of that hedge position. Okay, does everybody understand that?
It's something that they shouldn't try.
Okay, I have another.
Try it in a demo to get.
Go ahead, Elfie.
So the entry is at the top of that body. The sell limit is, or the sell stop is at the bottom. Where the body is, that range right there, that area.
Uh-huh.
I wonder if isn't that like that's the loss, isn't it? Or I don't know.
You would be in drawdown, yes. This you would be in drawdown. If you take your trade,
Mhm.
once the price hits this green area, you're going to be in drawdown, right? But
Yes.
once it goes your direction, now you're in profit. It's no different than anything else. I don't think the only way you can ever avoid drawdown is if you catch all of your trades, they already hit this area, and then you come in and put a buy stop right here. But how many times does that happen? You know, you need to be able to execute a trade based off of what you see in the market. You don't necessarily have to be there when it picks you up. As a matter of fact, I would venture to say that most of the time when I'm picked up in the trade, I'm not there watching it, right?
Mhm.
Most of the time that I get picked up in the trade, it taps in. Maybe it's 2 in the morning, maybe it's 4 in the morning, right? It doesn't matter. You're trading the setup, not the time, You know, this could happen in 5 in the afternoon, or it could happen at 2 in the morning. You're trading the setup. And you've already factored in the drawdown. Do you know how you factored in the drawdown?
I'm just wondering, like, why wouldn't you, for me, in my head, for some reason, I would just put my entry at the middle of that body. Same
Okay.
thing if I'm
Hey, listen.
hedging.
Hey, Elfie,
Hmm.
Savannah does that. That's perfect. Do that. I mean, if there's nothing wrong with that.
Okay.
But I want you to also understand, by doing that, you're going to miss out on a lot of trades. And there's nothing wrong with missing out on a lot of trades, right? So your 1%, this is how your entry would be. Right? That's what you're saying?
Yeah, and
All
then
right.
if I would be hedging, then probably have the hedging position at the same.
So let me ask you a question. What's the difference between your entry and my entry?
I don't know. I think there's no laws for some reason. Like
No,
this
it's
space,
the
I
same.
feel like the space in between.
No, listen. In this particular, you wouldn't go as deep in drawdown. That's what you're saying?
Yeah, I think so.
I don't care, because it's still 1%. It's 1%. Like on my 50K account, it's $500 no matter which way you slice it. So if I'm in drawdown, if I wake up and I'm in drawdown $300, I have $200 more I can go in drawdown before my hedge trades is gonna pick up. So in this case, maybe it doesn't draw you down as deep. Maybe it draws you down to $200 or $100. What you're saying is you feel better about being in less drawdown. So, but let me ask you a question. What
if my hedge position would also be at the same spot?
What's that, Elfie?
I said, if my hedge position would also be at the same spot, just going down.
Yeah, so, and my brother makes a great point. You won't be in less drawdown than me, because if it triggers my buy limit and it pushes down, but it triggers your buy limit here and pushes down, your lot size is going to be a lot bigger than mine. So if you go 2 pips in drawdown, you'll be just as much in drawdown as if mine goes 30 pips in drawdown. You understand? Because your lot size is going to be a lot bigger than mine. My lot size, for my position, I have to protect 62 pips. So my lot size might be a 3.0. Your lot size might be a 12.0. So if you go 2 pips in drawdown, that's $240. You understand?
No, I'm gonna stick to the small time.
No, I mean,
Too much for me right now. I'm not getting it.
and listen, I want y'all to understand, it doesn't matter where you choose your entries
Yeah.
in these order blocks. I just want you to understand, the further down you put this line,
Mhm.
the more you're going to take less trades. There's nothing
Yeah.
wrong with that.
I
There's nothing
understand
wrong
that.
with that. So, but frame it up however you have to frame it up. Make sure you're comfortable taking the setup. It's still the same thing. This is still the order block, and it's still you taking the trade at the order block. How you choose to do that is a personal decision.
The
I
other
get that.
thing
It
just
was just the hedging
is
thing.
the risk
that I was-
management piece and the bigger lot sizes versus the smaller ones, so if people are just gonna come in and say, hey, I'm always gonna, use a 1.0
Like essence.
or a whatever, then they're not really using risk management. Maybe, I don't know. I don't, if you're using risk management, I don't see how you necessarily can go in with the mindset you're only using X lot size. So you can, but you just got to be aware of, how much of your account you can blow, I guess is the best way to put it. I don't think everybody in the group is necessarily gonna say I'm always only using a 1.0 or an X. You know what I mean? So
Right. So
that's really the whole point of order blocks and minimizing the area you gotta protect via stop loss.
right. I think like my brother said, when you're using order blocks or when you're trading a funded account, it's always about managing risk, right? So you always have to do the math in order to get what lot size you're supposed to use. So if you come in here, you're only going to use a 1.0 lot size, then everything that I'm telling you is not going to be true, right?
Mhm.
The area that you have to protect, or your stop loss area, will always determine what your lot size is going to be. And everybody has to understand that. That's the very basics. At the very basic level, you have to understand that the pip count of your stop loss determines the lot size of your trade. All right, because you're only trading, you should only be risking. I risk 1% of trade. Some people risk more than that. But if you're doing the technique that I'm teaching you, you're risking 1% of your account per trade. Yeah, we can look at the daily essence. If you place your sell stop below your buy stop. Okay, you place your sell stop in this situation. I will place my sell stop wherever you would place your stop loss. And this would not be a buy stop. It would be a buy limit, because I'm expecting price to come from up here down to the area that so I would place my buy limit at my entry line and my sell stop at your stop loss line. Did that explain it, Tanisha? Does that make sense? I think there's a picture that's posted in the education room that shows you when to use your buy limits, sell limits, buy stops, sell stops. Once you get that down, then I think you can calculate your pip count. That's right, bus stops. We went over that. I know I haven't sent you that one-on-one, but it didn't compress yet.
You may have already touched this, but going back to your scenario with the $17,000 profit, using her way of I'm just using a set lot size, maybe she ain't got a $17,000 profit. Maybe hers is going to be 1,700 or 700 because she's using that just fixed small lot size. And I would say there's nothing wrong with that, but just remember the whole point of this shit is
this stuff
is so you can adjust and beef up your your
account.
lot sizes with confidence. And if you get stopped out, you're okay with being stopped out because you didn't blow the account.
Right. You're only losing 1%. No matter
Right.
what lot size it is, it's 1%. That's the point in using order blocks and risk management simultaneously. All right, Essence, you want to look at this 1 hour chart. What did you want to see on the 1 hour?
I wanted to look at the daily and the 8 hour just to see if we can get a smaller stop loss.
Okay, yeah, I mean, that wasn't the point of that exercise, but yeah, you can always do that. The point of the exercise was so everybody will understand how, when I say area of protection, so you understand what I'm talking about. Like, I'm talking about the body. My entry is at the top of the body. My stop loss or my stop trade will be at the bottom. You know, my sell stop will go at the bottom. So I call this protecting. This is the area that I'm protecting, even though the entire order block includes this wick and this wick. So when this trade comes down, it taps me in. So Elfie, let me see, let me calculate this trade that you would not have been a part of. Because here's the order block. Let's just pretend that this green arrow is the halfway mark that you're waiting on. This tapped me in and took me up. So I would have made $212 pips. I don't care what way you slice it. 212 pips is going to go to my pocket. You know, whatever lot size it is. That's an opportunity. This is a day chart. So this whole day, again, I already told you I'm going to add 2 positions the second day. So I got 3 positions and I'm up 212 pips and you're waiting on a trade. Not that there's anything wrong with that, guys. But it's, you know, the name of the game is to collect pips. Has anybody seen the Market Maker series by ICT? ICT discusses how to become a millionaire by collecting 25 pips a day. Okay, it takes 10 years, 25 pips a day. So if the name of the game is to collect pips, I would probably recommend to people to come up with a strategy that's going to allow you to collect pips more often, right? Don't worry about your lot size. Your lot sizes will come and there's always ways to manipulate a higher lot size. I'm not going to tell you all that. I'm not interested in telling you that. I want you to become successful first. And then I probably won't, chances are I probably won't have to tell you because you'll figure it out. But there are ways to manipulate higher lot sizes. But I don't want y'all to worry about the lot size. I want you to worry about entering the trade, finding a good setup. And in order to find a good setup to enter a trade, you have to understand the area that the trade is going to run. Like if I was in Lavish Ruby's course, and I'm not high side, you know, I love what Ruby has going on. I wouldn't understand why price is going right here. But because I understand how to frame a trade, that's what I call framing a trade. I know that this is my area. So I understand where I'm going to be getting my pips from. And that's the importance of identifying the monthly order block, the weekly order block, and the daily order block. Because once you identify those 3, you know where your trade is going to, you know where it's going to bounce between. You know when it's probably going to break through an order block. But you also know, hey, man, price is right here. It's probably not worth me trading between this range right here, right? I'll go look for a trade that offers me more than this range, even though Alicia trades this range, you know. I think she should. Alicia, I think Alicia did trade this range. This 45 pip range. I'm not bothering with 45 pips. I'm a day trader. I need to chase the higher pip count. So if price was between this range, is not tradable for me. I'm going to go find me a pair that's going to pay me more than 45 pips. All right. Place sell stop to go straight through it if it keeps selling, and place buy limits to put you back in the trade and make. I'm not sure I follow what you're saying.
I don't know what she's doing.
What is she saying?
When you put that hedge, what if it doesn't come back like you think it is?
Well, you can cut it off going in the opposite direction. It's not hard.
I think the probably the better question is how do you make a decision, hey, this motherfucker's not coming back?
Well, I don't think that, I mean, it's not going to happen unless unless something happens in the market. But that's why we trade order blocks. We know where the price is going. Order blocks, you don't get confused in direction. Oh, it's not a question. Okay, cool. Essence, did you see what you wanted to see? Or did you get the answer you wanted to get?
Yeah, I did.
Okay.
Thank you.
I didn't want to go off on this tangent, on this sidebar about order blocks, but I think everybody kind of did everybody get their questions answered about why I use the body of a candle versus the whole wicks if it's all part of the order block? What is my confirmation to add positions? Let's talk about that. So Elfie, let's say I get in this trade and it's going my direction, right?
Yes.
This candle comes down, taps me in. It's going my direction. So the next day, remember this first day, I'm not adding a position. The next day, this goes up. There's my confirmation. There's a bearish order block. I mean, a bullish order block. So I got in down here. It created another bullish order block, right? So I'm expecting a retracement. Maybe to get in at this bullish order block, maybe not. But what all I would have to do is put my fib. If y'all don't know how to use your fibs, Alicia has a nice video posted in a room. I would put my fib on this candle. I would draw my.
Are you putting it on that doji, on the red doji?
No.
Which one?
Right, I'm going to show you. Let me go to. Okay. This is the last candle that went up, right? Let me get rid of this. Let's say I got in this position and this day it created a new order block. What I'm going to do, put my fib on this.
On the green one, the last one.
Yeah, on the last candle. So it already started retracing, right? You use your fib whenever there's some wick at the top. So this is my area of interest, right? And as a general frame of reference, the first part of the day, the candle is going to go the opposite direction. The first part of the day, the candle is going to go in the opposite direction. So if this is going to be a bullish candle, it's going to retrace first. So what does that mean? That means that I live in New Mexico right now. I'm in New Mexico. So when the market closes on the East Coast, it's 3 o'clock my time. So that means while I do whatever I'm doing in the afternoon, this will be retracing, right? So I expect for it to retrace to this area. I can watch it. Why am I watching it? Because I want to add an entry, right? So I can either blindly try to add an entry by setting up the same type of a trade that we set up down here, right? I put my sell stop down here and my buy limit up here, or I'll just watch it until it starts rejecting. And once it starts rejecting, right, I drop down to the lower time frame, 5 minute, 15 minute, and I want to see a break of structure to the upside, then I'll add another position or another 2 positions, right? So what I do, how do I add 2 positions? I take $500 and I cut it in half. And I spend $250 on one position, $250 on another position, right? Y'all understand that? I risk $250 on one position, and I risk $250 on the second position. So if I'm at the lower time frames, when I see that rejection, let's say I'm on the 15-minute chart. And this is the start of the next day. So I want to see this thing come my direction. Or if it doesn't come my direction, I want to see this break these highs. There's a bullish order block. You see that?
Mhm.
There's another bullish order block. Here's the structure. It broke it. There's your retest. Now, once the price breaks this high, that's my confirmation. If it doesn't come down here and hit my position. Now I can, on the pullback, I can get in this trade. And I will only have to protect right here. I only have to protect that much. At this point, I can have a 20 pip stop loss and have a buy stop right here, right? I have a buy stop and a sell stop. 250 pips or $250 on this position. So somebody do the math for me. 250 divided by, let's call it 18.
13.
So my lot size will be a 1.3, right? So I can have two positions. I can go on my phone and do two positions at a 1.3, or I can do one position at a 2.6, right? That's just like adding two positions, right? And my sell stop will be right here. So, and that's exactly what I would do. It's either going to come back and trigger my sell stop, or it's going to go up. Once I'm sure that I'm good, I can come back and delete this position later on that night. I'm in the trade. The trade that Elfie decided not to take because it didn't go halfway back in her order block, which is perfectly fine. But the problem with a group like this, the problem with a group like this is somebody like me is going to be posting and I'm up 10K, and then somebody else is not going to be in the trade, and you get this FOMO thing going on. Instead of understanding how you can enter these trades and understanding how long it takes for these trades to play out. Like, this is not something that plays out over a 15-minute time period. Like, these are daily trades. They take time. And just because this left doesn't mean that I come back here and cut my sell stop off. That's not the way it works. I'm not taking my sell stop out until the next day. Y'all understand that? And this day, when I put these positions in, I can move my stop loss from my first trade up to this position. I'm not going to do it, but you could do it. I'm not going to do it because I don't want there to be any chance that price comes back and takes me out of my original position. I'll move my first day's stop loss up to entry. Does everybody understand how that works? Did that?
Yeah, yes. I did have one small question again. Okay, so you said you'll keep the sell stop in until the next day just to be sure.
Yes.
And then,
Do you know
but
why?
right before that, yes, because it could retrace all the way back because you're using a bigger time frame, so it could use a
Yes.
bigger, it could have a bigger pullback.
Right.
But what was it that you said you were placing right there once you, so that you can the same thing that you did for the first time, right?
Sell
The
stop.
limit,
Right.
right? Sell stop.
So I
Sell
didn't
stop for
get in
that.
the second entry. I didn't get it in the second entry on a limit trade. I got in the second entry on a buy stop because price was below my entry. What I said was,
Gotcha.
because I'm entering, or my entry would be above, it's just going to come and pick me up. You got to use a buy stop in this situation. And you use a sell stop because price is in between both of these ranges, right? And prayerfully, it won't hit your sell stop. It'll just hit your buy stop and keep going. So what this trade would have to survive for me is on Sunday, when the market opens, it's going to push down first, then it'll go up. So I have to survive this push down, and then it goes up. So if it just pushes down here and goes up, I can delete this sell stop position. And I can add a firm stop loss, you know, because I'm going to wait for the third day to come around. I'm going to add 2 more positions. Everybody understand that?
Okay, so you're not adding the other 2 positions until the third day.
So so the first day, I'm adding 1 position. I'm getting in 1 position. The next day, at the end of the next day, I can add another position. I want a full 24 hours to go by before I add anything to this trade, right? Now, technically, you don't have to do that. You don't have to do that. Technically, you could add 4 hours later, but I'm just telling you, I'm telling you because I don't want you to add and get caught up. If you wait a full day, you're going to be fine. If you add that same day and you do it the wrong way, you're going to go into drawdown, not necessarily meaning that you're going to lose your account, but people don't feel good about drawdown. And as a rookie, the worst thing that can happen to you is your trade can go red. Now you panic and you go get out of your position. So the way I'm explaining to you how to do this, if you wait a full day and you add your positions on that third day or on that second day, you're going to be all blue. Even if those second positions go red, that first position is going to be blue. And your overall trade will likely maintain its blue. All right, let me read Fifi's question. All right, in regards to bullish order blocks, create the order block, enter at the top of the red candle, exit at the bottom of the red candle. When a new order block is formed, heading in the same directions, use the fib to find. Okay, so when you say enter at the top, like this is a bullish order block. Yes, your entry would be at the top. See where this wick came down? Right to the top of this candle? That would be your entry. Your protection or your stop loss, in my case, my sell stop goes at the bottom of this red candle. Price would have tapped me in, we'd have went up. That's correct. Now, as far as waiting for a new order block the second day, it just kind of happened to work like that. So you don't necessarily need an order block. What you need is to understand what your pullback is going to be. So let's look at this from a daily standpoint. Let's say this is the daily candle, and you're in this position over the weekend, and you want to add another position starting tomorrow. Tomorrow is Sunday. The market opens up in the afternoon. So all you have to do is to use your fib on this daily candle. Make sure you go from the bottom wick. You go the same direction of the candle. If it's a green candle, you go from the bottom wick up to the top wick. And what this fib is telling me is that the golden zone the 50% retracement mark is right here. And this is where you as a trader are going to look for price to reject. Now, price can very well come right through here. It can retrace all the way to the 79% area. And a lot of times it will. So this is where you can look to enter. It doesn't mean that you're guaranteed for price to stop here. It just means that there's a high likelihood that it'll come here and push out. Okay, so sometimes, don't get me wrong, sometimes you're gonna put those second entries here, and if you're not watching the trade, if you go to sleep, you're gonna lose this trade because your entry will be here and price pushes through the golden zone, and then it goes up. I know because I've lost several times like that, okay?
Is that why you said that's why it's a buy, when you just a buy stop, right? Like it's just, you just pick up the trade because it's gonna touch that zone, or I mean, a buy limit, right?
It's a buy limit in this case because you're picking up when it comes down, right?
Right.
If it goes through, it's gonna get stopped out. But in my case, it's a buy limit and then it's a sell stop. So I don't lose this trade. I understand that the price, if I'm going to sleep, especially I'm in a hedge. If I'm awake, every now and then I don't use the hedge. But I don't want to get y'all confused. I use the hedge in my trade.
We're at the bottom. Where's your sell stop?
It's right here at the bottom of the zone. It would be at the bottom of the zone.
That's the golden, the 61.
Yes.
The 61.8.
61.8.
Why can't you do a buy?
Okay. And then the buy limit is at the 50.
I understand.
Right. Buy limit is right here at the 50. That's right.
Got it. Thank you.
All right. My brother has a question for me.
Why can't you just put a buy stop right there? I know the price is up here, but if you know the price is going to come down here, probably it might bust through, but it's going to come back. Why can't you just put a buy stop? You don't have to bother with the bullshit down here.
So you're assuming that you can't use a buy stop until price passes this point.
So the system just won't recognize it.
No, you can't. The system won't allow you to put a buy stop if price is above already.
Okay.
It won't show up on your MT4. It'll be gray.
Okay, I got you.
So do everybody understand that? I mean, his question was, if I know price has the ability to go past the golden zone, why can't I just put a buy stop here? Because it won't let you. If the price is above where your entry is, only going to allow you to input a buy limit. Okay. But here's what I would say to everybody. If you're trading on a daily, we're all awake during that time because this is the Asian session, right? If you're trading on a daily and you're trading a pair, the AUD is active on the Asian session, it's going to happen before you go to bed, especially if you live out west. All right. Maybe on the East Coast, this happens at 10, 11 o'clock at night, maybe. But as you get further in your trading journey, you're going to use those alerts and alarms, and even you'll use an alarm on your phone to get up, because sometimes it's worth your while getting up at midnight and seeing where this trade is at, right? Maybe you don't want to use a limit order, right? Maybe you want to see it with your own eyes and you wake up at midnight and price is down here somewhere. Now you can just come in here and put a buy stop and a stop loss. And as price comes back up here, it picks you up and it goes. You'll be tired at work the next day. But at the end of the week, when you're $17,000 richer, it'll be worth that lost sleep, or $5,000 richer or whatever, right? You have to kind of figure it out and taper it to you. That's all I did, was take what I saw and fit it into my style, right? Like whenever I noticed that these wicks would tap you in on the next candle, I was like, oh man, that's all you need. And on this case, when it didn't tap you in, so what? You missed the trade, right? But the further that I went with this order block and I understood that this whole wick was part of the order block, I even started putting my entry at the top of this wick. And it would tap me in at an itty bitty lot size. but I would wake up and I would increase my lot size. I would do exactly what my brother said. I go put me a buy stop right there. Not at an order block. And it would pick me up. The only problem I found with that was sometimes when it retraced, I would go red. And when it went red, I would feel bad as a trader. But, and sometimes I would cut off my position. But what helps you is if you use a demo and your real account, when you do it in your demo, you forget to make changes to your demo. So at the end of the week, you'll look at your demo and like, man, I made 6,000 in my demo and I lost 400 in my real account. That's because you was playing, you kept playing with the figures and moving your stop loss in your real account, and you just let the demo ride. So that teaches you to let the trade ride, man. Let the trade do what the trade does, and you're gonna make money. So when y'all see me post my results in the chat, and, oh man, you made this much. All I did was add the entry and let the trade ride. And what you will notice, if you look at those trades, most of those was one entry. One entry. Did y'all see that? Most of them were one entry. I didn't even go back and stack it up.
Yes.
So that tells you everything you need to know. You only need one trade that you can add to. You don't have to have 7 different trades. But you have to do, as a beginner, take one position until you're comfortable. Let it ride. Let it ride the whole week. I don't know what y'all make a week, but most people I know don't make $6,000 in a week. You can make $6,000 in a week with one position. You can make $2,000 a week, one position. Just using risk management. You can have a $20,000 funded account and you can make $4,000 a week regularly with 1 or 2 trades. So once you get there as a trader, then you'll start seeing ways that you can add to those positions. And that's what I challenge you to do. You don't have to be greedy. Just take what you see. Like all of us drop set trade ideas in there. If you're not the best person at picking trade ideas, look at the ones we put in there. Take the ones that you agree with. Just take one of them and work that thing. Put it in your demo if you have to, and work with it in your demo. Watch it. Let it ferment. Let it take. Every trade idea I put in there is going to be a swing trade. I will never put a intraday trade opportunity in there, and I will never put a short range. That's not how I trade. I don't look for that. So if I drop the trade idea, it's going to be a day trade or maybe like a week trade. Y'all saw the Euro USD trade I dropped in there off a weekly chart, and it ran 200 pips or close to 200 pips this week. So maybe it'll retrace a little bit for the first few days. If you listen to that ICT, if you listen to those ICT videos, you will understand how the market is going to move. So maybe GU and EU will buy the first 2 days of the week. And then guess what? It's going to fall off a cliff, and they're going to count all them pips back up. So those trade ideas on the weekly chart are going to play out over several weeks. This is not a 1 week thing. A day trade is going to play off over several days. And if you look, whenever these things are ranging, let me move this chat out of the way. Okay, this is GU. So GU is heading down. Why is GU heading down? Because everybody knows that the dollar is going to. Oh man, I didn't mean to do that. Everybody knows that we're going to raise the interest rates. Oh, you piece of crap. So GU is tanking. If you look at it on the weekly chart, this was the weekly setup that Essence caught, because I didn't get in this trade. Essence caught this trade. So if I take the fib measurement, this was the start of this down move right here. It came down here. It retraced to ICT's optimal trade entry, 79. Now it's dropping again. If I use the fib tools, it will tell me that I can take this trade to this area. This should be my target area, way down here, guys. And fundamentals will support that because, I mean, everybody knows we're going to have multiple interest rate hikes this year. Now, Britain is going to raise their interest rates too, but it doesn't matter. This is going to keep pushing down. Your next order block is down here. So if you ride this trade down, you'll get there. But here over the next week, if you notice, there's no retracement candles in here, right? Just like there's no retracement candles when it went up. This whole move right here was a retracement move from down here. If you notice, see how these order blocks are pushing down? See how you got the bearish order block? Now you got this first bullish order block and you push up. This is a retracement move. So as this pushes down, they're gonna have to throw in order blocks. So you might get a retracement week next week. Then you're gonna get the push down. You might get a retracement week. Then you're gonna get a push down. If you pay attention to how price moves on these candles, it will clue you in on when to expect your retracements or when you can get in the next move. If you understand that this is a bearish move, then even if you have a bad entry, it will eventually correct your mistake as long as you're selling. The problem is when you start buying the retracement. If you bought this move and then you kind of here and it started going bearish again, it's not going to come back in your favor. Whereas if you sold this move and you could hold all this pullback, now the market is going to push down and it will correct your mistake. So that's why it's important for us to frame our trade. So we'll always know, hey, this is a bearish order block. Price is going to push down and I can expect a reaction at this bullish order block. So price is pushing down. Essence could have held this trade until it got down here. The thing that Essence can't control is how much time it takes to get down here. It might take another 2 weeks for price to come down here, but it's coming. You know, this might go back and tap back into this bearish order block, but price is going to come down here. And y'all can mark that stuff down.
Hey, Todd.
Yes, sir.
Hey, will you look at AU? I had it marked up, but I got confused on some of these order blocks. But I think it's in a retracement coming on down just like the other one.
Yeah, I mean, all the US, if you have something in front of the USD, they're all going to push down, right? Some will push down harder than others because the currency is weaker versus the US dollar. The sterling pound is a pretty strong currency. The problem with the pound is it's considered a risky currency, right? That's another thing. A lot of you guys need to spend a little time on your fundamentals because all of these market conditions mean something. So you got the backdrop of coronavirus. Every few months there's a new variant, right? Supply chain, the global supply chain is in flux. It hasn't recovered yet. You have that Chinese real estate giant, Evergrande. They're going bankrupt. Everybody's getting burned. So there's a lot of risk and uncertainty involved in the market. When you have risk and uncertainty in the market, the currencies that benefit from that are the Japanese yen, the CHF, and the USD, right? The USD, we have a strong economy. Inflation is running wild. We should have already raised interest rates, but everybody knows that it's coming. So your currency is gaining momentum because every time we get a CPI report that reports inflation, it's something like 5%. That's why when you go buy your pack of pork chops, you're paying $30 for your pork chops. You just pay $6 for, or whatever. You're paying $16 for pork chops. But if you understand how these things affect the market, then you don't have to wait to start selling AU on a long, like, you know that this is going to be a long-term push down, right? Now, you also know that at the end of the week, you're going to have a retracement. Does everybody understand that? You don't have to wait for this thing to start pushing up on Sunday. Because it's a weekend, I can go in here. I can put my fib on this candle, and it tells me that I should expect price to push back up. Now, get this. This is another.
Where'd you put your fib? Because your measurements and Alicia's are not the same, I don't think.
So listen, I got it. Alicia uses different fib measurements. I got my fib measurements from J-Take Profits, right? That works for me. Alicia's fib measurements and Des, they use different fib measurements, but it works for them. So this is what I need y'all to understand. When you get your trading set up for you, it's your tools and they work for you. If you're using Alicia's measurements, her measurements might say something different. Like her number might be 89 versus 86. But I'm going to explain what this means. This percentage is the percentage of a retracement, right? This first line is a 23.6 level. That means from this red candle, price has retreated 23%, right? Even if hers says 25%, her line would just be a little bit further up, right? So it doesn't matter. Basically, we have the same readings. We're just saying that it's retraced 20-some percent.
Oh, it's like y'all.
I'm sorry, go ahead.
So it's like y'all got different numbers, but the numbers don't really make a difference because they use certain numbers on theirs because it's just a percent. That makes sense. Because
Right.
it's just
So if you like 89%, I like 85%.
yeah, okay,
That
makes sense.
The gist is prices retreated 85% in my case and 89% in your case. We still know that prices pull back over 80%. So here's the key takeaway. Banks enter these trades at discounted prices, right? They don't buy anything full price. So they might get in the trade at this order block. They're going to take their profit down here and they're going to let price come back up. They're not getting back. They're not going to sell this again until they can at least sell it at a discounted price. So once price comes back to the 50% mark, they can get in at any time. We don't know when they're going to get in. We just know we can expect it to pull back to the 50% mark. So maybe they get in at 75%. I don't have a 75% fib management, fib number. I have a 61.8 and a 79.8. But they get in at 75%. It's going to be just shy of my 79.8. But I still understand that that's an area that they're pushing the market back down and it's safe for me to get in. Does that make sense?
I just don't see where you put your fib, like what candle did you put the fib on, if that makes any sense? Like,
okay, I used the last candle. Let me get a clean sheet. AUD USD. Okay, when you're doing a fib, you're always going to use the last candle, right? So this is the current week that we just got out of, right? Everybody understand that? So I wanted to understand how far this price is going to pull back.
We need to clarify that statement.
Hey, Todd, and you gonna do that on the weekly chart each time? Or it
Yeah.
don't matter the chart?
Statement want to
What are you talking
about every time you use the fib, you're going to do it on the last candle. You are when you're trying to figure out where the next move is, but there are times when you use it for the swing. Just
you do, but I'll approach that when I get there. So when I use this fib, I'm going to use it at the end of a week. Like this is a weekend. So I want to know where this retracement is going to happen on this weekly chart. This is a good time to bring up the markets being fractal. What does being fractal means? That means that no matter what chart you look at, price is going to retrace on every chart, right? It's going to retrace on the monthly chart. It's going to retrace on the weekly chart. It's going to retrace on the daily chart, right? So if I understand that, and that still it's going to be, I'm going to get a 50% retracement on the daily, just like I'm going to get a 50% retracement on the weekly. So if I understand how all that works, then on this weekly candle, since this is the end of the week, my area of interest is going to be right here in my golden zone. Okay. I don't want to lose you guys, but when you start playing with these tools, you have to put yourself in a situation where you actually understand the objective. So in order to use a Fibonacci, you really need to see a retracement. And in this case, you don't see one on this candle, right? You see that? There's no wick at the bottom. So technically, we shouldn't use Fibonacci. But I just want you to understand that I'm just doing this for a general area that I can expect to pull back. So maybe when this candle opens up tomorrow, it's going to push down a little bit more, but it's definitely going to pull back. You understand that?
I think I framed my question incorrectly. I was saying, I understand the Fibonacci retracement tool. I just didn't see where you dragged it from. Did you? Because I was dragging it from like the bottom to the top and putting the lines there where I didn't see an actual direction of, well, I saw the direction, but not the pinpoint of where you were putting.
So let me explain that. You always drag the tool the same direction as the candle went. So if you're in a green candle, you drag it from the bottom to the top. If you're measuring on a red candle, you're dragging it from the top to the bottom. If it's several candles, if you're measuring this entire move and you want to know where the retracement is coming back to, right? If you're measuring this entire push down, you're going to go the direction of the push. You're going to start at the top of this red wick. You're going to measure it to the bottom. You want to see this push come back into your green zone. Where does it come? Right to your green zone, your golden zone. And it
hey, Todd, so yeah, based on that, has it already, that's my question, has it already hit that and already on its way back down?
Well, it did. Listen, it retraced from this. This is an impulse move. This is a retracement. It did. It hit right where it's supposed to. But this candle is also going to have a retracement. Why is this candle going to have a retracement, Terrence? Did you watch the video that I made about price action, the healthy price action?
No.
Okay.
No buyers in there? Is that?
There you go. So healthy price action looks like this, a wick, right? This third candle, this wick needs to come all the way up to here, right? By there being no wick right here, that's telling you that this market pushed down with so much force, there's an imbalance. It left an imbalance, right? Y'all know what imbalances are? Yes, yes, T, this is an imbalance. So there are no green candles. The only time that buyers were in the market is in this wick. Everywhere else, well, actually there's a little wick right here. So from this whole body represents only sellers, no buyers. So this next candle that starts has to buy up, right? I'm not saying that it's going to buy up the full length, even though it should. For this to be healthy price action, you should see Sunday, you should see a green wick go all the way up here. And then price should fall all the way down and keep pushing down. Chances are we're not going to see that, but that's what we should see, because that represents healthy price action. And that's how I was able to kind of come up with this strategy. Whenever you get healthy price action, it's always going to tap you in, right? You see how this order block has no bottom wick? Everybody see that?
Yeah.
What should have happened with
Yes.
healthy price action, this wick should have came all the way up here to the bottom of this green candle. That would have tapped you in the trade and it would have taken you down. In that case, you didn't get healthy price action. You didn't get to be a part of this trade. But if you look over here, you got healthy price action right here. You framed your trade, the wick comes and taps you in and it takes you down. You made a lot of money. It pulled back and it pushed you down. You still in this trade making money, right? Because of healthy price action. If you understand that as a trader, you're going to make tons and tons of money when the price action is healthy. And when it's not healthy price action, when price pulls away too fast, you know, eventually you got to come up and fill in
These
gaps, right? So
hold on, where's the gap down here on the end again?
I'm gonna show you. There's a gap right here. There's an imbalance from this wick. Let me just shoot a ray across there. So if you go in YouTube, fair market value or fair value gap imbalance, this is exactly what you're going to see. Where this wick didn't come up and touch where this candle is, this represents a pool of money that was never tapped into, right? So this market is going to go down and do its thing. Right now, this entire area, the entire body of this candle represents a fair market gap. Only sellers, this candle is only red. Only sellers were involved in this market. So what's going to have to happen is buyers, the green candle is going to have to come up here. It's going to be green. And then it's going to have to cook off, right? So there is a video, several videos you can watch. They will tell you in order to close an imbalance, you need to fill it, right? The wick needs to fill it 50%. If you look over here where your fib tool is, there's a GAN box, G-A-N-N. You can place this GAN box over your imbalance. You can shoot a ray through the 50% mark. Your 50% mark is a 0.5. Right? So this is called confluence or confirmation. Here's where you're 50%. Once price gets here, that imbalance is full, is considered filled. So if I know the price has to come here, and this is where my 50% mark is, I could technically, I can set me up a short position. Let's say I was going to sleep or I'm going on a date. Y'all all got things to do, right? Let's say something in your life was going to happen and you wanted to take a trade. You could set it up where you know the price needs to come and you can have your stop loss in the golden zone. And that's a perfectly legitimate way to set up your trade, right? And you can go on about your business. It'll tap you in and come down. Maybe it'll stop you out, but it's still a good trade setup, right? You have to recognize what a good trade setup. This is a good trade setup.
And on the GAN box, did you use the wick too, like you do the fib? I'm sure you do, right?
What do you mean? Did you use the wick?
On the GAN, when you put the GAN box on.
Yeah. So I only use the GAN box to measure my imbalance, right?
Hey, Todd, are you using Oanda?
I am. But listen, this chart. Listen, y'all. This chart is not Oanda, but yeah, I only use Oanda. I didn't use I used this chart because
you have markups on it.
Yeah, my other ones had markings, and people were having questions. Where did I put the fib? I just wanted to use this chart so people can see what I'm doing.
Well, I only asked because the other one has a wick.
Well, I know. Only you would catch that. You know,
I'm trying to make a trade.
So let me go back to my Oanda that I had marked up. I was using this one, but see how my markings, And somebody was saying, hey, did you, where did you put your fib and all the other stuff? So, instead of me killing my markings, I just went and got a clean chart. That's all.
Got
Can
you,
you use
but
the box again?
All right. Let me just kill this, because since Terrence busted me out. All right.
oh, I'm just trying to make
No, that's
sure
cool.
that,
That's cool.
that
So
what you're saying based on that wick down there, you still like all that still applies. That's all.
yeah. So I use my GAN box on the imbalance. So you see that little wick at the top of this candle? Let me blow it up. So
this is still an imbalance, even though it has a wick at the bottom.
yes, the imbalance is not the wick.
Where are your buyers?
The imbalance is the body, right?
Impulsive move.
Because it shot down with such force. The wick means some buyers bought it back up, right? So buyers participated at the top of this market and buyers participated at the bottom of the market, but only sellers participated in the middle. So you see the wick of this little candle up here?
Mm-hmm.
The wick of this candle?
Mm-hmm.
You start the GAN box at the top of that, at the bottom of that wick, and you bring it down to the bottom body of this candle.
Okay.
This is your imbalance, right?
So from the wick of the previous candle to the body of the current candle.
Right. And why the wick of this candle right here? I'm asking, why would I measure it from the wick of this candle?
That's where buyers were.
Because buyers were still participating.
Right. And the answer I'm looking for is in a three candle formation, 1, 2, 3, there has to be overlap, right? Like this third candle has to meet up with this first candle. You can't just have this first candle, the second candle, they overlap, and the third candle overlaps with the second candle. No, that's not how it works. You need this first candle to interact with the third candle. That has to happen.
Does it?
Yeah, or you're gonna have an imbalance. So when this new candle is gonna start right here. If this candle just sells, this imbalance just gets this much bigger. So what you're gonna see is this candle is gonna buy up first, right? Really, it should come and interact. This is perfect price action. But because of how hard this impulse is, it's probably not gonna make it all the way up there. Maybe it'll come right here. That imbalance is considered closed because your GAN box says that 50% of your imbalance is right here, right? So maybe price goes right there and it sells down. That's considered healthy price action in this case. This is what you're looking. The advantage that you have as a trader is that you can identify this stuff on a chart. Once you can identify this on a chart, you're going to win all the time, right? You're going to recognize this is an order block. All right, we have to tap into that order block. You win. It sells, right? You know where the retracement. Hey, every time a new candle happens, there has to be a retracement, right? And this is even more beneficial when the price starts ranging or trending, right? Because it's going to push your direction or push against you first, then go your direction. And it's going to go down, right? So let's look at this range right here. This first candle, it's an order block. It pushes down. The wick comes down here. The candle opens up, it retraces. It doesn't tap you in, but it pushes down here. So if you were a savvy trader, right? Hey, Todd, there's no order block. Yeah, but you understand as a savvy trader how price action works. So you could look at this candle, you could set you up a short position right here. And you could protect either to the top of this wick or just to the top of this candle. Why? Because you know market structure and you know price action. Healthy price action says that this wick has to interact with this wick. So that's where I'm getting in. Boom, it taps you in, price sells down, just because you understand how price works. I didn't want to show you that. Y'all make it. I didn't want to show you that. I just want you to get in the trade at the order block. But what I'm telling, if you drop down time frames, trust me, there's an order block right here.
Hey,
But-
Todd, would you
Go ahead.
would you mind, because I think this one has a lot of I don't know what you call them, a lot of confirmations. I think this one has a
Confluence.
I think it has a nice trend that you can see. I think it has there's a trend.
All the pairs do. And you know, I like the fact that you're doing your research, Sharon. A lot of people don't do that, but this is a classic example of once you understand how price moves on a chart, man, you're gonna make money hand over fist. Because
So this one has a trend, the Fibonacci, that new thing you just said. What do they call it? A GAN box. This has a lot working.
So you can use a fib and get the same 50%. But you know, whenever you go on YouTube and you look, people are always going to pull out the GAN box because it's a fancy new tool. You can use your fib. The 50% on the fib is the same as the 50 on the GAN. But I'm just being.
I'm saying you already showed that. You already showed the fib, and you showed the GAN box, and it got a trend. So it's got all of them at the same time.
Right. Does everybody understand what we covered so far?
Yeah, I ain't gonna lie. You done said a couple things I ain't never heard before. But it's like, I understand it though. I get what you're saying. Right? Cause it's like, you gotta think, especially about the I see what you said about the imbalance thing just threw me completely, because I'm thinking the whole time like, oh no, our price has to come up and completely fill it. So there's a lot of times I'll put sell limit, buy limit, whatever limit orders on imbalances, and okay, price is gonna come back up here and tap me in. You know what I'm saying? Just like when I used to just trade, it's like, and then it don't tap me in, and I'll just hop in the trade. You know what I'm saying? Stuff like that.
Yeah, you know, you should never hop in the trade. And that's my thing with you, Aaron. You got FOMO. And I understand that. I mean, especially you're young, you want to make money, your dad is making money, so you're trying to have, don't worry about my profits or the next trader's profits. Worry about your understanding of price movements. I guarantee you that all of you guys will find a different way to enter a trade that makes sense to you, right? So once I understood how price moved, that's how when I showed you this trend, I don't need an order block. I don't need one. All I'm looking for is good price action, right? So this is perfectly smooth price action. This wick comes down, this wick comes to meet it. This wick comes down. Once I see this, the next week I'm ready. Right? You see, this is pretty price action. So this week, when you get this wick and it pushes down, man, you like, man, I'm gonna enter right here.
Hey, that's like trading 3.0.
Well, look, price, this chart, you don't need indicators. The chart tells you everything.
Can you put that? That's because you've been looking at them a long time. Can you put the order block? Can you put the order blocks on here for the people in the back?
So you would have to drop down in your time frames. So
why? Well,
because this is what it looks like. You see these order blocks? This is exactly what we were looking at.
Okay, but do like the monthly, weekly, daily, like real fast.
Okay.
Frame it.
There you go.
I was gonna say that was the start of all of it.
Yeah, I know. So this is how I would do it quickly. This will be my monthly, right?
Okay. Okay, now you skipped the middle one, but keep
Okay,
going.
hold on. Let's go back. You said I skipped this one?
Yeah.
Price is below it.
Okay, great. I got you. That makes sense. I'm with you.
So once price goes below it, there's no wick on this candle. Once price breaks it, it's done. It's invalid. So this will be your next one.
Okay.
You go to your weekly.
All right. So you're going back looking for one that price hasn't broken.
Right.
All right.
It's not invalid until price violates it.
Gotcha.
Okay, so this is
Man,
what-
there's nothing closer than that.
no.
Good
This
grief.
is what you want to see. So if I'm looking at a trade setup, right?
Yep.
There's only a 38 pip range to this daily, right? So it's not worth my while. But if I would have caught this trade up here before it made this, now you have a 250 pip range that you can sell this to. And if you got in for a sale, you'd have tried, you wouldn't have made it because this price action was too horrible. You would have gotten in here. If you got in with a stop loss, you got wicked out. So you wouldn't have been in this trade. But if you can catch this trade as it starts selling, you have 250 pips of free reign, right? 250 pips that you can get in and ride comfortably down. If you entered this on a weekly, you get tapped right in. If you try to enter on a daily, you don't get tapped in. That happens sometimes.
But can't you catch the retracement?
Well, you can. You can, but I'm going to tell you, man, as a rookie, it's going to be hard for you to retain everything that I'm saying. So I would suggest that you pick one technique. Only enter after the order block at first, right? Then once you get comfortable with doing that, catch the retracement entry, right? Then once you get comfortable doing that, then start looking for your good price action, all right? If you have good price action in a range, chances are it's going to stay good price action for that impulse move. Maybe the next impulse move, the price action gets a little bit more raggedy. What's
now,
up?
when I say catch the retracement, I mean after it retraces, sell it back down. You don't think it's
Right,
going to
I know you mean like this, because this is going to buy up, catch it and sell it back down.
You don't think it's going to push past that daily one to the weekly one?
No, I don't think so. I think that your retracement, this is a weekly candle. So when you measure, that's the point of measuring each retracement on each candle. So at the end of every day, when me and Aaron get together, I do this same exercise on a daily candle, right? At the end of a week, I do this exercise on a weekly candle. Monday, it ends the month of January. So I got to break out the monthly chart and do the same exercise on this monthly chart, right? So in this case, this monthly chart is an order block. You see that? I have to move this order block down to the new order block. If I measure the retracement, I guarantee you the retracement is going to hit this order block. What y'all think?
I definitely agree.
Sense.
Hey, Todd, for
I'm just
me,
thinking, go ahead, Mom. Go ahead, Mom.
I was gonna ask as far as the framing is concerned. So I know we hadn't finished that thought all the way through, or did you just finish it? Because I want to wrap my head around the whole frame.
Okay. So yeah, I just framed the market. Let's go back to the data. I found out what a monthly order block were. You can label it if you want to. I don't necessarily do that all the time because I kind of have an idea. This is the monthly. These big ones are the monthly. This is a weekly. This is a weekly. This is a daily. This is a daily. Because I framed the market, I understand as a trader, the only place I'm going to make money is between this order block and this order block. I can't make money up here. I'm not going to make money up here. It doesn't do me any good to put my short tool on and go past this order block, because you can't make those assumptions. You only know that price is going to travel from where it is now down to this order block. Once it gets here, it's either going to reject and bounce off, where it will go back up to this order block, or it's going to push through and hit your weekly order block, right? So when I say frame the market, I want you to understand as a trader where your range is, right? And the reason why you have to do this is because a lot of times you're going to look at a trade setup and you're like, man, that thing is selling. And what you're going to have is you're going to have an order block here. You have an order block here. And then I'm going to ask you, well, where is the price going to go? You don't freaking know, because it's in the order blocks. There's no trading range. So that pair, it's going to move, but why would you trade a pair that you don't have a clear direction? That's how you set yourself up for failure. There's a lot of guys out there that will tell you trading is about having leverage or having an advantage over the market. The advantage that you have by trading these order blocks and framing your trade is you know exactly what direction it's going. You know that when it sold from this order block, when you set your sell position up, your sell tool, your take profit was this order block. That was your advantage over the market. That trade is in your favor. It's just going to go down. So all you have to do is set it up and get paid.
Okay, one last question about the framing. So now, like if we
Yes.
did a replay on
Yes,
this and we,
Yes, Alfie, it does mean that. Go ahead, Selena.
so we see, okay, so it's gonna play down and we're gonna take our profit here. And then basically after it does that, we just leave this pair alone, go and look for the next order block and keep it moving. So that's no longer relevant, or do we still play in that area for another while?
So this is what I don't think you can answer that question with a blanket statement, right? So what are the fundamentals behind why are the USD pairs pushing down?
Because of the news,
Because of the interest rate.
Because of the interest rate. So let's just say that this bounces off this order block and goes back up here. And let's just say that prices is within order blocks, right? Like, let's just say that this price is in this weekly order block and the Fed comes out and says, hey man, the order block is, the interest rate is now 0.50. You got to sell it. I don't care if it's in an order block. The reason that it's pushing down is because the interest rates are raising. So you have a fair understanding of why the currency is moving. All right. Now, the other day, somebody gave me AUD chef and it was in the middle of the trading range. And that person wanted to trade it. So I asked the person, why? What do you know what's going on in Australia? Do you know what's going on in Switzerland? If the answer is no, go find something else to trade. Right? That's what I would tell you. Like, you want the advantage. You want the advantage over the market. All right. So somebody missed the clarification on what it means to find an order block where price hasn't broken. What it means to find an order block.
Hey, yeah, go back to that bottom daily one you drew.
This one?
Yeah, and you see how far away it is from the current.
Okay. So, all right. When you start framing your market, you have to identify the order blocks on each time frame, because on each time frame, the order blocks will affect the movement of the pair. So when you look and you see price at this range, you have to go and find the next order block that it's going to react off of. Okay. So price doesn't just arbitrarily move. This price reacts off order blocks and imbalances, right? So if you're a short-term trader, if you're trading off the 4-hour chart, it's no different. You have to find you have to find your order blocks on your time frame, and you have to identify your imbalances on your time frame, right? Now, a lot of times when I speak of framing the trade, I never talk to you guys about finding your imbalance, right? Because currency pairs don't move like indices move, right? Indices will always find the imbalance, right? Currency pairs tend to hit your order blocks. It leaves imbalances, but those imbalances may not be filled for 6 years. They might not be filled for 6 months because they don't move as fast as indices. So your order blocks are what you want to key in on, right? Especially as new traders or as inexperienced traders. Don't worry about the imbalance. So in this case, and look at Brianna. Brianna, you said, did you state?
You answered my question already.
Yeah, so don't worry. Like, you're going to get this reaction, but the price is still going to push down. So don't worry about it. And this is the important thing about not worrying about the time of your trade. Like, a lot of people will say, well, how long is it going to take? I don't know. I don't know how long it'll take, because it could bounce from this imbalance to this imbalance. The point is, the market maker will do what they have to do, even if they have to do a redistribution right here. Y'all know what a redistribution is? Yeah. Brianna?
Well, they moving price around to get a trap sellers. Is that what I mean?
They manipulate the tops. Yeah, it'll be a Wyckoff distribution schematic where they'll manipulate the top. They'll set some false tops to make you think that price is going to sell, and they'll keep taking out the top. They'll keep taking out the top. All they're doing is getting money.
Big stop losses.
Yeah, taking your stop losses up to push the price down. That's it. So if that has to be done, it'll be done. And if that happens on this daily chart, it might take 2 weeks, but the price is still going to get to the next level. You can't ever put a time limit on your trade. Maybe it happens in a day, maybe it happens in 2 weeks. It is what it is. As long as you're making money, what difference does it make? Right? Any other questions? I mean, we're very long today. Normally these meetings last an hour, and I'm not complaining, but just just understand. Like, I'm available throughout the week to do one-on-ones. All right. So going forward, I want to try to shoot to keep this meeting at an hour. I want to respect everybody's time, and if we want to get together for sidebars during the week, let's do that. I always want to answer everybody's question. Today we kind of got sidetracked. I wanted to go over 3 charts to frame the market, but I think who still has a question of framing your trade or framing the market? I want to make sure that we put that one to bed.
Well, you did too.
Well, yeah, I know, but we dived off into kind of in-depth price action and all that good stuff, which is information that everybody needs.
I needed that. You true. Today was great. Today was great, man.
Yeah.
I ain't gonna lie, like, you done said something got me thinking.
I think things click to that.
Yeah, I got the stamp of approval from Sean, so it must have been all right. But so if you guys need to hit me up during the week, go ahead and do that. I'm headed to my mom's house now, but I'll be available throughout the week. And if you guys need sidebars, hit me up. Please drop your trade ideas. It's very important that everybody puts a trade idea in the room. All right, go to Discord, drop your charts in there. If you don't drop your charts and you mess up on a trade, you'll never know why your trade went wrong. Okay, there are some of us are decent at looking at charts. Others are more decent, at other things. Man, let's lean on each other. This is free for all of us. So lean on each other to get what you need, to be a better trader. All right. I appreciate y'all's time. I'll call it a day, and I will drop this sometime tonight when I get to Texas.
Safe travels. Thanks, Todd.
Thanks.
Appreciate it.